Hi, I'm Li Min, an investment specialist in CGSI. Welcome back to our margin financing series. In our previous episode, we explored how to calculate the value of your pledged securities, work out your margin maintenance ratio, and pinpoint exactly when a margin call might be triggered. If you haven't seen that episode yet, be sure to check it out. Today, we are diving into the details. What exactly is a margin call? What can you do if you receive one? And how do you calculate the minimum margin maintenance ratio? Let's get started. What exactly is a margin call? Here's an example. If you bought 20,000 worth of stocks with a 10,000 loan, your margin maintenance ratio would be 200%. Collateralized share value divided by the loan amount times 100%. If that ratio slips under 125% but above 115%, your broker will notify you through a margin call and you must add collateral or reduce your loan. Think of it as your broker's way of saying, hey, your account needs a little boost. Using our previous example, you buy $20,000 worth of stock with $10,000 of your own money and $10,000 borrowed on margin. If the stock value drops to $12,000, your ratio is now 120%, which is below the 125% threshold. To meet the 125% maintenance margin, you need $12,500 in equity. To achieve this, you must top up your account with $500 in equity. A margin call usually happens as a safety net for both you and your broker, making sure there's always enough collateral to cover your loan. Let's look at some ways to respond to a margin call. The first way is to top up cash. To derive the shortfall amount, we use this formula: 125% times total financed minus total collateral divided by 125%. This results in a $400 top-up to meet the call. The second way is to pledge marginable securities. To determine the shortfall amount, we will use this formula: 125% times total financed minus total collateral divided by the valuation of marginable securities. Based on this scenario, $500 in equity is needed to meet the call. The last way will be to sell existing securities. To derive how much securities we need to sell, we will use this formula: 125% times total financed minus total collateral divided by 125% minus valuation of marginable securities. Therefore, to meet the margin call, $2,000 worth of securities needs to be sold. If you ever get a margin call, don't worry, but do act quickly. If you don't respond, your broker might have to step in and sell some of your shares to bring your margin maintenance ratio back up to the required level, 125%. And here's the thing, they get to decide which shares to sell, how much, and at what price without needing to check with you first. To keep things running smoothly and stay in control, just make sure to sort out any margin call within 3 market days, including the day you get the call. If your margin ratio dips below 115%, things get a bit more urgent. A forced sell call is triggered. In that case, you need to resolve it on the same day, or your broker will have to step in and sell some of your holdings to get your ratio back up. So, the best move? Respond to margin calls as soon as you can. That way, you stay in charge of your investments and avoid any surprises down the road. In summary, the margin maintenance ratio is to ensure that the value of your collateral always stays above a set minimum compared to your loan amount. This protects both you and your broker. If your ratio drops below the required level, you must quickly add funds or securities. Or your broker may sell your assets to cover the loan and so as to maintain enough collateral to manage risk and keep your margin account secure. Thanks for joining us on this margin financing journey. We've covered everything from the basics of margin accounts and leverage to understanding margin calls, maintenance ratios, and the smart ways to manage your risk and maximize your investment opportunities. Remember, margin financing can be a powerful tool, but it's important to stay informed. Keep an eye on your ratios and act quickly if you ever get a margin call. With the right knowledge and a little discipline, you can make the most of margin trading while keeping your investments safe. If you found this series helpful, don't forget to like and share for more tips on smart investing. And if you have any questions or want to learn more, reach out to your trading representative or leave a comment below. We're always here to help. Happy investing and see you soon!